Welcome to FT Markets. The irresistible rise of sterling has focused attention on when and how soon the Bank of England may raise interest rates, and to what extent that will coincide with a rise in the US. This morning, the Bank of England published its July minutes. And with me to discuss just how hawkish the bank is sounding is Steve Barrow from Standard Bank. Steve, welcome to FT Markets.
Hello.
The first thing I want to focus on is the key hawkish statement from the bank. This is talking about, the minutes talk about inflation relative to the 2% target being on the slightly skewed to the upside, and that for some members Greece was perhaps material in their decision, but without Greece, you know, it would have been a very finely balanced to vote for a rate increase. What do you make of the mood of the bank?
Yes, a bit of a dichotomy. Obviously, on the domestic front, things progressing perhaps as the bank would like to see. A little bit more optimistic about growth, looking for 0.7% GDP in Q2 and Q3. That's slightly above the sort of pace that Carney has said recently is required to close the output gap. Inflation expected to rise later in the year. But then on the international front, you've got to bear in mind this MPC meeting was right in the teeth of the Greek crisis, after the no vote, before the bailout was sort of provisionally agreed. And so the Bank of England would have been very uncertain. That clearly made some members uncertain. I think now that's lifted, things could be interesting
so August
in August.
August is going to be fun, isn't it?
Well, I think probably one or two members will vote for higher rates in August and continue that through the rest of the year.
Let's look at our first chart, which is a wonderful historical perspective. This goes back to 1972, Steve, and this is sterling against the Deutschmark. It's an old beauty. What did you like about it?
Well, I think it answers sort of a number of questions about sterling's relationship with not just the Deutschmark, but with the euro, and indeed this issue of whether the UK should have gone into EMU, because prior to EMU starting in 1999, we were used to a pretty never-ending sterling slide against the mighty Deutschmark, and the Deutschmark was carrying other Eurozone countries with it, the French franc and the Italian lira, this sort of thing. So sterling was quite a beleaguered currency in many respects. Yet, in actual fact, if you kind of look at the post-EMU period, you see a good deal of stability, which maybe suggests that the UK, perhaps in some senses, was right to stay out.
Well, let's look at post-sterling. So our next chart, we tend to look at sterling through cable, which is the relationship with the dollar. But this is actually the trade-weighted index from 92 post-EMU all the way through to the present. And clearly you can see quite a 10 or 12 year period when sterling is quite, we're not there yet really, but you can see towards the end, the last 18 months looking like quite a lot of momentum for sterling again.
Quite a lot of momentum, and I think we're going back to that 100 level for the trade weighted index. So it's another 5-6% increase on where we see at the moment. Could see some degree of overshooting. I think most of that strength will probably be against the euro rather than perhaps the dollar or some other currencies. I'm looking for euro sterling to move to sort of 65, maybe even 60 pence in time, and that should push us up to that 100 level on the trade weighted index.
Let's look at our next chart, which is actually cable this year. We can see it's again June at the top was probably the height, but we can see it trending up. So you think, I mean, what would you say would be a fair value for sterling against the dollar? I mean, the average from 92 is something like 163, isn't it?
Yeah, I think it's probably a little bit maybe below that level in terms of a fair value, probably somewhere not too far away from where we are at the moment in the mid-50s. In actual fact, if you look at sterling dollar since the crisis, the financial crisis in 2009, sterling dollar has been, you know, kind of pretty much in a sort of 140, 170 type range. Monetary policy between the UK and the US is pretty similar. I think the minutes kind of suggest it's two central banks are thinking the same sort of way. I think that should mean that sterling dollar continues to be pretty steady. If you like, the dollar is a strong currency globally. Sterling sticks with it, and both currencies rise against others.
Our final chart is the same, but over the period of the month. And I suppose the point about this one is austerity was meant to be a particular concern on sterling, and there on July the 8th is the day that George Osborne did his budget. But we seem to see sterling actually shaking off any concern about austerity weighing down on it. Do you agree with that?
Well, I think it shook that off, and perhaps shook off some of the Greek blues as well, because again, that period where that dip there was during the kind of
Indeed.
problem period for Greece. So in many respects, I think that and the budget have clearly helped. And there has obviously also been a tweaking of the austerity with respect to the UK. I mean, I think perhaps in the March budget and maybe in the election as well, we were kind of given the impression we'd have a 2-year mad dash towards fiscal austerity, and that's kind of been eased a little bit and elongated a little bit, and I think that actually bodes well for sterling.
So finally, Steve, US raising rates when, do you think? UK raising rates when, do you think?
I think the Bank of England will go in about February next year. The market's priced for about May, so I think it'll be a bit earlier than that. As far as the Fed is concerned, I think that will be September, which again is earlier than the market's currently predicting.
Thank you, Steve. So there we have it. A lot of momentum behind sterling. We're looking at interest rates coming soon, but not soon enough to beat the US to the rate hike race.